Hi guys, I'm Rita. You may have heard about Making Tax Digital, a UK government initiative to make tax submissions easier and controlled. And you might think that it will not relate to you. But it is an ambitious goal of HMRC and they are going for it. If you are a freelancer, agency worker, contractor or a landlord, can I have drums in studio please? 2024 will be your deadline to go digital for your income tax returns. Or maybe it will be a start line. Cannot do that one, hey ho. If you want to find out more what Making Tax Digital is and what you need to do, keep watching. What is Making Tax Digital? Making Tax Digital is a process of leveraging digital technologies to improve the government's tax administration system and transform the current reporting process by the businesses. In short, it will soon be your turn to declare every single penny of income and expenses to HMRC digitally through compatible accounting software or app, and also more often. Firstly, let's find out what HMRC says Making Tax Digital means to a taxpayer. HMRC have advised that Making Tax Digital is intended to help businesses get their tax right and help to keep on top of their business operations. Government calls this process affairs. It is designed to eliminate paper-based or manual processes. This in turn will reduce errors and improve the accuracy in tax returns, reducing the time businesses spend on the tax administration. Also, it will provide businesses with more time to maximize business opportunities. The all above points will be achieved by mandatory use of digital record keeping and using Making Tax Digital compatible software to provide updates and returns to HMRC digitally. But now, let's have a look what this actually means to you as a taxpayer from your perspective. If you are not already using, then you will have to start using some sort of accounting software that will be compatible with the set Making Tax Digital requirements. You will need to pay a monthly subscription fee if the free version of an accounting software will not suit your business needs. You will need to be up to date with your paperwork. Firstly, keeping those in a digital form, and secondly, recording more frequently. So you will need to spend time to keep up with records more often instead of doing it only once per tax year. While it is advised that Making Tax Digital will reduce an overall time spent on tax, unfortunately, an additional time for making new quarterly updates will in turn slightly increase the time on additional tax submissions. Will you be affected? Don't panic. Making Tax Digital for income tax will affect two groups of people. Firstly, all self-employed workers known as sole traders. This includes freelancers, contractors, agency workers, and etc. And secondly, landlords if you declare your rental earnings via self-assessments. Are there any thresholds? Yes, there are. If your personal income is above £10,000 across your businesses or properties, then you will need to comply with the new MTD requirements. But if your income is £10,000 or below, you will continue using your current or existing self-assessment system. Will reporting requirements change? Under Making Tax Digital, it is proposed that the self-assessment tax return is replaced by a minimum of 6 new reporting obligations made during or after the tax year. So, one self-assessment will be replaced with more frequent reporting requirements. There will be quarterly updates required, where you will need to submit digitally information for each income source to HMRC every 3 months. The information required will be in the form of summaries of your business income and expenses. At the end of the tax year, you will need to submit an end of period statement for each income source. This is where you will be able to make any accounting adjustments and claim any reliefs. Once this will be done, you will be required to submit a final declaration for the tax year and, of course, pay tax. The final declaration replaces your self-assessment tax return. For example, you have two income streams, one from freelancing and one from work doing as an agency worker. So you will need to submit 8 quarterly statements, 2 per quarter. At the end of tax year, you will need to submit 2 period end statements for each income stream and 1 final declaration. So in total, 11 reporting instances for a whole year. But don't panic! Your software should be capable to produce summaries and reports for you. If you have added all information frequently on your MTD compatible accounting software. MTD, I mean Making Tax Digital compatible accounting software. Will deadlines change? You must submit quarterly updates within 1 month after the end of quarterly period. Like with the previous self-assessment submission process, the deadline for submitting end of period statement and final declaration will be 31st January after the end of tax year. This applies also to paying tax by this date. If you do not submit and pay tax by the deadline, you might have to pay a late submission penalty. When does this go live? This measure was due to commence for accounting periods starting on or after 6th April 2023 for self-employed businesses and landlords with business turnover above £10,000, but this has been delayed due to pandemic. The new start date is 6th April 2024, and it is regardless of your accounting period end date. What action should you take? You will need to sign up to Making Tax Digital for income tax starting 6th April 2024. And if your qualifying income will be above £10,000. But if you wish, you can start using this service voluntarily now. This will allow government to test and develop services before the go-live date of 6th April 2024. Making Tax Digital will be compulsory depending on your business circumstances. You will need to start using an online or cloud-based accounting software or app to be able to submit your reports automatically to tax institution. Software will work as a bridge between your cloud accounting software and HMRC. A key requirement: software should be Making Tax Digital compliant and able to communicate with HMRC digitally. Government has made your life easier by listing approved accounting softwares that are compatible with Making Tax Digital standards. And you can choose any of software providers from this list. At the moment, the list is not very long, unfortunately, but you can start getting familiar with one of these softwares. However, the majority of the well-known accounting software developers are working on their systems to get their softwares Making Tax Digital compliant by the deadline. You can reach out to their support teams to check their progress and if software will suit your business needs. In my personal opinion, Making Tax Digital is introduced to maximize sales of government. In simpler words, more tax paid to government. While this might be a worry to businesses who are guilty of misreporting data and have gained historically a benefit, this in turn will help to get a healthier process of reporting business operations and Overall, a straightforward reporting process between businesses and UK tax institutions. Key points. The Making Tax Digital for Income Tax initiative will go live on 6th April 2024. And it will be regardless of your accounting period end date. You will need to choose one of government approved Making Tax Digital compatible accounting softwares to submit your summaries and reports directly to a tax institution. The requirements of submitting reports will change. You will need to submit quarterly summaries, period end summary, and final declaration. If you have any questions or need further advice, feel free to reach out to me. Please keep subscribing to get a notification of my next episode. And get comfortably seated because I will get government approved Making Tax Digital softwares under the magnifying globe. Thank you for watching, and I will see you next episode.